The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Hello and welcome to the closing bell for March 26, 2025. I'm Keith Harwood here for Yellow Tunnel and Tradespoon. Normal disclosures before we get started. Options involve substantial risk and are not suitable for all investors. Tradespoon, Yellow Tunnel, and myself are not investment advisors, not registered with the SEC nor FINRA. If you do have questions about your own personal financial situation, please consult with a registered financial advisor. The information in this presentation is for education and information purposes only and should not be considered trade advice. The presenter of this video, myself, and or the team at Tradespoon may have a financial interest in the securities presented and the trade ideas. So please keep that in mind as you evaluate concepts that we discuss for your personal investment and trading portfolio suitability. Welcome, welcome, welcome. We are getting a dip again. So still a bit of a fight. It's now multi-day on the fight-flight response, it seems like, right? So we have up one day, then down 2 days later. Instead of up and down same day, we're spreading out the behavior as opposed to having rapid shifts in flow same day. So good, bad, or ugly, we've got a market that is not quite ready. All right, so it looked ready, and then now we've got a press conference this afternoon talking about auto tariffs again. And that seems to be hitting the market, getting ready for that here in just under an hour. Toyota, Honda, they're not actually the worst performers on the day. The worst performers on the day are actually stocks like ETN, somewhat surprisingly. Mercado Libre getting hit pretty hard today. GameStop's the best performer. That was an earnings move. But broadly speaking, as I look at the 25 biggest magnitude moves today, it seems to be heavily focused on tech. Alphabet getting hit, AMD getting hit, Amazon getting hit, XBI getting hit again. So the biotech industry not having a good performance for another day here. Semiconductors, one of the worst performing ETFs. So we've got a lot of things getting hit today, again, in the process of trying to show that bottom and now maybe fading that bottoming action. We'll see where it goes from here, but right now it's not a fight from the bull for today. Maybe after the news comes out this afternoon, maybe if the press conference comes in a little bit later in terms of the verbiage than expected. Probability of success, given today's behavior, so now we go reevaluate on a day-to-day basis, it seems still. Yesterday it looked like that probability of success was going to the bull and the return on capital going to the outright long call position. VIX is higher today, maybe not high enough, frankly, but higher today. The anti-bear and the anti-bull seem to have a bit better odds in their favor. Now, if one is truly bearish, the VIX looks like it needs to rise. So looking for bearish setups with an outright put does tend to look better to me than a bull credit or a bearish call credit spread. However, that's that probability of success element. If I sell against the highs from this week, that can be a reasonable concept for this week, maybe for next. Tariff news comes out, all of a sudden we push through it, means the bear is wrong or the anti-bull is wrong. If the tariff news that comes out this afternoon is weakened in terms of the verbiage, as I mentioned, then the anti-bear comes back into effect. VIX starts to get hit again. Now the bull can come back into play above, today's and yesterday's highs, back above the 200-day moving average, back above some of these key points. But right now, we hit some resistance. We've got some fleeing from the market for the bull. It is not long-term holding of the positions right now that seems to be occurring. We're still getting short-term behavioral responses to news. It's not bearish yet. It's the first day of the pullback. I don't want to call this a bear market yet, but it does put a stopping point on the bull's thought process, right? So before we were taking like one step forward, then 2, 3, 4 steps back. This time we took 4, 5, 6 steps forward, and now we're taking 2 steps back. So we're giving up some of the gains, not all the gains, but some of the gains, and in a fashion that is not in line with what I was expecting that we were seeing, which was more long-term sticky money. It's acting more like it is short-term trading still, but again, not same-day traders necessarily, but couple of day holding period, shorter-term investment money that was looking to get out either for a good profit, maybe turn it into an investment if we rallied, but with a sell-off, they were quick to pull back out. So jumping back out of the pool when it starts to get a little too hot. As mentioned, long and short the market at the same time with a certain bias works, except no understanding the correlation. So like Duke Energy is up today. Market's down, Duke is up. Yesterday I was talking about how if you're long the market and short Duke against it, that's kind of the same direction. Today, down market, up Duke. So keep that in mind as you're evaluating longs and shorts. Biotech's weak yesterday and today. But we're not seeing necessarily high correlation to the market, and being short semiconductors and long utilities isn't a hedged position. That is a position. Long tech and long VIX can be a hedged position as long as you understand the right sizing, knowing that the VIX is more in a bull. But overall, right now, just keep in mind what you're trading in terms of long and short the market. Understand the correlations. When we get into liquidation, if it occurs again, the liquidity really starts to dry up in some of those individual names. So understanding where to go for that liquidity in terms of a potential market sell-off is crucial. If I'm long a bunch of financials, I don't need to go to semiconductors to hedge my position. If I'm long a bunch of financials, I need to go to XLF to hedge my position. If I'm long a bunch of utilities, I need to go to XLU. If I'm long a bunch of foreign stocks with Chinese exposure, I need to go to FXI. Playing off the right correlation as opposed to just playing a general broad market short S&Ps is a hedge for everything. It's not a hedge for everything. But I think right now we're getting back into a spot where some of those anti-bearish trades can come to be pretty decent. I'm honestly, for myself, I'm struggling with the concept of whether I want to try to go anti-bearish on this break, or if it's moved enough now that I want to stay to the sidelines. I'm staying to the sidelines for today. I think I'd rather see what happens this afternoon, how the market reacts, and then come back in for the bull side or the anti-bear side tomorrow. If the market has no follow-through to this pullback tomorrow morning and overnight tonight and tomorrow morning, then I'm much more confident in saying that Amazon should stay above $200 a share. JD.com staying and holding, that still seems good. It's not necessarily correlated to the domestic elements because it's a Chinese stock, right? So, looking for that stuff that's not as impacted can also be a way to, find some of those leverage points and find some of those independent of the market, uncorrelated trades. Okay. And that's where I can allow more space potentially because of the VIX rising, and get a better odds of success on my anti-bearish trade, or I can go more time for the full bull trade. And that's comes back to, I think again, some of the like Fortinet, PanW was on the Palo Alto Networks was on the aggressive power trader list for today. Those sort of names are coming in intriguing to me for a couple of reasons. Number one, you see some of these data breach type things. We're talking about the Atlantic getting access to texts about attack plans. I think that should be putting cybersecurity back on people's radar to a certain extent. And maybe that actually becomes the follow-on reaction after just trading along with tech today. So, I'll look through some of those names again today. Of course, PanW because it's on aggressive power trader, Fortinet because I talked about it yesterday and it's on the weekly power trader list for this week, as well as, of course, all the other stuff that's moving. All right. Still not a fan of selling naked options. Earnings dates on the positions, the ones that we were looking at overnight, GameStop last night, Dollar Tree this morning, Dollar General moving actually with Dollar Tree today. Chewy didn't do much. Cintas was rallying. I don't see anything exciting tomorrow morning. So I'm not worried about earnings tonight, tomorrow morning, but I have to start looking as we go forward into some of the financials are going to have earnings before April expiration. Keep that in mind as you're evaluating these trades. As we go into earnings, we start to trade a little bit differently, some potentially positioning for earnings, some positioning or reducing positioning ahead of earnings, so that can have a shift in the way the money flow works. All right. And then, of course, the options are going to be impacted by that. Stuff that looks too expensive isn't too expensive if earnings are part of it. Okay. I mean, it still might be, but then it's an earnings play. Now calling the bottom for today. Looking for that bottoming process today, but again, I think we may be selling the rumors and potentially buying the fact, buying the news once it's out today. We'll see if that's what the market reaction is, but that's kind of how I'm looking for it, but not positioning on it because it's no guarantee. It's kind of a coin flip, a little bit, maybe a bit better than a coin flip that we buy the fact, and that's not enough for me to want to buy into a market with a rising VIX. All right. 10-year yield stable, nothing shifting there. Bitcoin more interesting. Pulling back a little bit today, not a whole ton, down 2,000. It is still weak, but it's not below the 10-day, it's not below the 20-day. We are still holding up relatively well. I don't want to see Bitcoin below 83.5. Below 83.5 gets me concerned in Bitcoin and the crypto investment, but this is not a huge shift there yet. Just a dip within the bull trend, staying above some of the key levels on that upward trend for now. Tomorrow may shift that entirely. And MMFI 50-day or stocks above the 50-day moving average, naturally a little weak today, but again, still above the 10-day and the 20-day moving average for that indicator. Overall, nothing to be alarmed about yet. This is more of a follow-up with if the market was getting too aggressive on the downside or the upside, and right now it's not as aggressively oversold on MMFI. We never got to an overbought state, of course. I'd be looking for 65 plus, but that shouldn't occur until we're at a new all-time high. The VIX up here. Let's switch over to S&Ps. So S&Ps down $7.50, down 1.3%. Worry about tariffs, worry about what's going to come next. And you can see we just been drifting down all day. So last 2 days to start the week, it was jump on Monday, grind a little bit, and then consolidate, finishing on the highs. Stable all day Tuesday. Down, started getting below yesterday's lows, then started getting below Monday's lows, and then started trying to fill this gap. 565 would fill the gap. I don't think we get there today. The news has been expected. We'll fill that gap. But for now, that's not my baseline. We stayed above the 10-day moving average, but we fell below 20. And most importantly to me, we fell below the 200-day moving average. Yesterday was showing some really good signs of holding. Once we got below yesterday's low and below the 200-day moving average, the liquidation side of things kicked in. The VIX is still low. Frankly, I think the VIX should be around 21. It's under 19. Not a lot of fear in this market. So it's not people looking to hedge positions. Still, there's no panic need for insurance. People that needed insurance got it or got out. That's what the market's telling me. Now, there may be people out there that need to get out or need to hedge, but broadly, big picture, we're not over long in this market. We're not aggressively long to the point where people are panicking. Will that occur if we start to fall to new lows? Quite possibly, and I would think probably we start seeing the VIX back above 25. And that must be, to me, why we're not at 21 like we probably should be, because the market doesn't have enough to it to panic yet in terms of positioning. SQDX staying low. People aren't aggressively buying puts. They're not aggressively buying out the money options. They're not aggressively buying anything. They're not aggressively buying protection nor leverage. At some point, that may shift. At some point, we may see a big skew shift if the market starts to rally a little bit more consistently, and we have fewer down 1+% days. But for now, this is what we've got. And tech is the worst, down 2%. So tech down 2%, semiconductors down 4%. That's a bad indication for tech. Yesterday, semiconductors were weak with tech strong. Semiconductors are now below last week's low. We are in the range from March 13th. That was that Thursday, right? So we're within the Thursday range. Last week's low was 221.41. So we're a little bit below that. Tech, as you saw, we're still well above the March 21st lows. We're still above last week's lows in general. That was around 473. So semiconductor market may have more downside, particularly in tech. So people are not buying into NVIDIA right now, down 6%. People are not buying into AMD, as mentioned. One of the worst performers today, down 5%. And it's one of the worst performers because the implied volatility here is 40%. This is a much lower volatility name than some of the other semiconductors. Of course, NVIDIA, 45%, right in line with that. But NVIDIA panic out. AMD was starting to show bottoming and then maybe topping out, getting back below the 50-day moving average. It's been one of the worst performing semiconductors. Seeing a little bit more panic behavior there between AMD and NVIDIA. Palantir, AI, down 5%. For the, but I think we need to fall more before I'm confident with that. I want to see a test of 84. I'd rather basically say that would stay above 80 than 84. And part of the reason for that is that 84 may not hold. It's kind of a weak support. 80 is a much firmer support, but it's not enough premium for me to want to sell an 80.79 put credit spread for 11 cents. 84.83 for 20 cents, that looks decent on the return. 80.79 is where the probability of success starts to kick in for me. I'm not confident enough to do that yet. Not for that smaller return for a week and a half. Maybe tomorrow, though, that's enough. So if Palantir is stable tomorrow and the market's rallying, 80.79 put credit spread next week makes more sense. But 198, I start targeting 115 again, and I'm looking for a call debit spread. So it's in kind of an inflection point. Market fall, but looking like bottoming kind of fall, not a slam down type fall. I can look for a Palantir credit put spread. If it starts to rally back aggressively and we unwind today's fall, boom, I want to go bullish. Not anti-bearish, I want to go bullish. IWM, down 1%. So smallest loss of those three. Small caps, between small caps, tech, and S&Ps. Still above the 10-day moving average as well, testing the 20-day moving average here. Still particularly here, really, in a long time. We're well below the 200-day moving average, but small caps only getting hit a little bit today on a relative basis, a little less than the S&P. And financials is one of my big barometers for small caps, only down 0.4%. So financials still look broadly decent. We had a new high today. We did sell off. The market wants to get into financials. So financials still seem to be an avenue for potential success with a higher probability. But when people are seeing a bottom in the market, growth often leads, and then we're going back to tech. And that's why I look for semiconductors or AI to be a good indicator that people are getting aggressive on their buy side for that full bottoming action. So I want to see semiconductors get some leadership here. But at the very least, right now, I can feel a little more confident with financials and small caps if I don't want to take the risk of going. One other sector just to note here, XLE. Energy's up 0.5% today, a little bit more than that. It was a new high for this move. We are staying near yesterday's highs. ExxonMobil is the winner right now for the AI signals for paid through the strike, above 118 now. Those options are up to what? 276. So a nice return on those, nearly double, I think, right now. But of course, because of the way the tech is getting hit, Amazon down, and even Capital One, in spite of the financials being somewhat decent here, is getting hit. And of course, GE, tariff concerns. Speaking of industrials, we should pull up DIA, down about 0.5% today. So even better than small caps, I guess, I suppose, still above Monday's low. So all in all, the DIA trade, which is somewhat dominated by, the fact that it's only got 30 names, big names like UNH. UNH is up today. Goldman's down a little bit. Some of the stuff just offsets since there's only 30 names versus the S&P, which has 500, or the Russell, which has 2,000. DIA is not as great of an indicator of broad market behavior. It's an indicator of that third basket of 30 stocks. All right, so keep that in mind as you're looking at DIA. It's something that a lot of people look at, but I prefer to look at the NASDAQ 100, the S&P 500, the Russell 2000, and then going to individual sectors with the ETFs like XLF for financials, SMH for semiconductors. And I mentioned XBI. Biotech's down 2.5% today, testing the breakdown. So they've been consolidating near lows. I think the danger or the risk-taking trader could say we'll stay above the lows. The previous lows are 84. How confident am I that it stays above? 70% maybe. Returns 25%. Doesn't line up for me in terms of a positive expected value. If I think that's only got a 70% chance of staying above and I'm risking 4 to make 1, that's a negative expected value. If I cap my risk at half the premium paid for the 83-84 call spread, which is 2 to make 1, risking 40 to make 20. Now it works for that type of trade to work. And this gets to 40 cents if we drop down to about 84. So we get down to 84, we get below 84, I'd have to get out of the 84, 83 put credit spread, and that would be my loss of $20. So if I manage my risk by that being my stop, it's a good trade. If I'm going to say that I'm letting this go no matter what through the end of the week, I'm risking 80 cents to make 20. So I'm risking $80 for $20 profit, and I don't like it anymore. So thinking through the entry and the exit points is crucial for managing those type of trades, to say the least. All right. Did not hold 30 for now. That was a rejection. It got to on the 30s is 25,000. Today's volume is 70,000. Big trading volume here on this 2930 1x2. I'm not sure if it's actually trading as a 1x2, but that's really where it's trading out, right? Effectively looking at a 1x2 call ratio spread here, probably taking off a position, and then more people getting active with it. Is 30 going to be the pin this week? That is still up for debate. The 2830 32 call fly is up to, how about right now, about $45, 45 cents. A little more than that now. Let's see, $1.50, $1.05, 25. Yeah, 45 to 50 cents. So it's up a little bit. It's not up as much as I was looking for. I think above 29, it really starts to kick in. And as the market continues 90 right now, down towards 70, that could be a really nice winner. If we stay right here, it ends up being worth 45. If we drift towards 30, it goes towards $2. So I still like that fly. I think holding it right now makes more sense than exiting. But to each their own on the management of it. I think it should be trading closer to 55 or 60 cents. But give it another day and maybe it gets there. And then Dollar Tree. There we go. Dollar Tree was bullish on earnings, up 3%, and Dollar General up 2.5%. So Dollar General did trade right in line with Dollar Tree this time. New high of this move, 85.07. Today's high was 85.81. So we pulled back, going into earnings, bullish earnings, grinding higher, bullish earnings in Dollar Tree, still going higher. I like Dollar General here, more so than Dollar Tree. But Dollar Tree, if one likes to go straight off of the earnings there, it was a bullish earnings case, went to 74, rejected it, came back down with broad market selling. I think you can start looking at target to move to 75. So, in April, 71, 75 call debit spread in Dollar Tree is $1.30. That looks attractive to me. Max value is $4. It's trading about 30 to 35% of the max value. That's right in that window, that wheelhouse of leveraged return. Big open interest at 75. It looks decent to me. Good open interest there. I want to see how that open interest shifts overnight. If that 3,200 volume today is closing out that position, then that reduces that magnet effect for April 17th, 2.5 weeks from now. Good open interest here in March as well. Maybe there was a calendar there. I was thinking call spread and call spread, but it may be a calendar on the 75 line. May have been a calendar on the 70 line. So I want to watch that open interest, see if we can get some more money flow in Dollar Tree to push back towards 75. It seems unlikely for this week, but outside chance it happens. But for positioning for a bull trade, I like to have that little bit more time. And that's why I go all the way out to April. Implied volatility down to 46% in April is getting pretty good, pretty reasonable here. The lows in implied volatility around 37.5%. If the implied volatility was 40 or lower, I'd look outright call, but at 45, I think call debit spread, especially with some of the resistance above in that $75 range from December through February. We had a lot of volume here between, call it 70 and 78. It just seems unlikely to me that we just push right through it now that we've got the earnings out. All right, so we would need some other fundamental input to get it moving, or a broad market move to get it moving. Chewy was a bit of a non-event here, up 3 cents. So it tried bull, it tried bear, it settled with not moving. Glad that was a looked like a no trade setup and didn't have a trade to it. And then Cintas up 6%, a little bit more than the normal expected move. Normal expected move is around 4%. Normal realized move is about 5.5%. Pretty in line with that, slightly more, 205. Kind of looks like a potential target price. 200 usually is a bigger one. There's no open interest in Cintas, and thus was not looking like a great trade setup. But bullish is good. We'll see how it handles things going forward. I have no forward right now. Okay. Let me think through what else we want to focus in on first. So no earnings for this afternoon or tomorrow to look at. Let's talk about the autos. Ford down a nickel. Auto tariffs aren't going to matter for Ford apparently. GM, there's concern there. We're not back to yet last week's range. We're still above Monday's low, but there's concern here. Depending upon the news today, that could shift to bull mode, targeting 55. That could shift to bear mode, targeting 46. I think we're looking at a $4.50 move either way in the next few weeks. But that's generally kind of priced in, right? The 51 straddle is $4. I'm looking for about a $4.50 move, and it's priced at $4. No edge to buying it. I think right now it's just a wait and see and use it as an indication of what's coming. Toyota down almost 2%. It's harder to trade Toyota, frankly. That's an ADR. It has some gapping movement to it. I tend to stay away from it. Honda Motor Company, down a little bit today. Another ADR. It does have a concerning RSI potential rollover here and back below the 200-day moving average. But again, this is going to be news driven to me. And once we see the news, maybe there's a trade in Honda. But coming into news, I don't like making the trade right now. All right. How about Jets? So Jets, there we go, down about 1% today, still above the 200-day moving average. When I start thinking about things like auto tariffs, I kind of think about some of the other industrial, things like jets, the airlines, see if there's an impact there. United down 2%, kind of in line with some of the other auto manufacturers. Boeing down 2.5%, down kind of in line with the auto manufacturers. So, if the auto tariffs come in light, it seems like people are selling some of those other names like Boeing and, Caterpillar a little bit. Some of these kind of names instead of the autos, kind of oddly. Tesla, that is a higher volatility name, so normally moves about 2.5 times GM. It's moving about 2.5 times GM today. And people are all worried about Elon Musk's association with the political side of things and how that's impacting his ability to run his company. So it may be putting another weight on top of Tesla. If this stuff comes out weak on the auto or weak for car manufacturers, and particularly Tesla or the auto manufacturers, that might be a sign that there's a growing disconnect between Musk and the current, political structure. I don't know for sure. Maybe he wants to see more auto tariffs because somehow that can actually benefit Tesla. Again, we'll see where things go with this, but it's all stuff to watch. And then I think trade, the reaction. It's not like earnings where we have a predictable size move based upon history and some great strikes to try to pinpoint based upon open interest. It's a very much unknown right now. And I don't like to trade wild unknowns. I like to have predictable unknowns that I can trade off of. All right. Let me run through the stocks I was looking at yesterday in particular with like book credit spreads. So JD, I think, looks still perfect for that. We were looking at next week's like 40.39 put credit spread, currently 23 cents. That looks like a really good R&R. 41.40 for a little more aggressive, but I think 40.39 looks like the high probability one, 23-cent credit. That starts to look really attractive to me, given the way that it's rejected that 40 level so many times. So I still like JD here. Micron is getting close. So Micron's now getting close to the anti-bearish trade. 88 looks like the level to play off of. Maybe a little bit lower down to 86. 88 a little more aggressive, but 86 is the safer number. And 86 for next week is about 18 cents. 88 is about 26 cents for the dollar-wide put credit vertical. And I still think that this is getting close to a good setup here. It's not 11 cents, it's 18 cents. So just thinking about the risk, yes, again, it's risking 80 to make 20, but it seems like it's got a higher than 70, 80% chance of staying above the previous lows, given the consistent rejection of the break to a lower price. And again, it may be better suited for tomorrow, but there's always reasons not to trade it. If I'm looking for something to position today, JD seems like the best for now. Micron is right up there, a little lower return, maybe a little bit more subject to some of the market behavior than JD credits. So getting closer to being good there. And then if we do start to rotate, I can look bullish, target 105, lather, rinse, repeat. But for now, I like the anti-bearish. Bullish would start to come back in the $95, $98 range. Then I target 105, and when you get there, got to close and then start again. If I being a broadly expectation of a market bull in the long haul, I don't like to go anti-bullish in Micron. But if one's looking for that, I think as we get to the 102 to 104 range, that's a spot to start looking at an entry there for the anti-bull. Not looking for the breakout. Until then, anti-bearish, now that we're in the lower part of the quadrant, anti-bullish can start to kick in here. So flat or neutral near the highs. And then looking to get one. Okay. Just to note on this, I don't see a trade here yet. I'd be looking for like 106 as a key support level. Sense, I guess it's not bad. Actually, it's not much better, or not much. Maybe 105. No, look at it. Let me just look at this one more time. Yeah, 105. It's getting close. 15 cents for 105, 104 put credit spread. Maybe tomorrow. Maybe we dip a little more. But we find that support. We look for that bottoming action if we dip too aggressively. If we go down to 108, then we're getting into falling knife risk. If we grind down a couple more bucks, then the 105, 104 put spread starts getting interesting. It's all about the speed of that break. Below 109, below 108, I'm very nervous. If we stall around 111, I start thinking about that 105, 104 put credit spread then. But again, not today. Not far enough down. Better trades out there for the anti-bear. And as I mentioned, I think JD is right on that. If you want to look into some of the other energies, by the way, CVX, much more of a breakout than ExxonMobil, looks much more bullish broadly. Oxy, from my pitch for Warren Buffett here, pushed through the 100-day moving average today. That looks like a 53 target. That could be an interesting trade for 53. Schlumberger, playing around with that 200-day moving average. If we can close above, I start thinking about 46. If BP gets a little bit more push here, I'm waiting for the new high in this case. So closer to 35.5 is a long entry. We're too close to the highs for me to want to be bullish here. The bear could probably play for 31st. So ExxonMobil is a good one for the bull. We got potential for $4 more. The options are generally cheap. I like it. But if you prefer the names that have already broken out, that's CVX. And if you prefer the names that Warren Buffett prefers, you'll look at Oxy. Okay? That's the way I'm looking at those energies at the very least. Let's do some Bitcoin. Oh no, before that, let's do bug. So cybersecurity getting hit a little bit today. I don't think this makes a lot of sense to me. So Fortinet was one on the weekly power trader list, and it looks relatively good here. It did reject the 50-day moving average today. I'm not looking for the 50-day moving average to be a real resistance point. 110, 112, 114, a better resistance point for me. So we've got some room to run. But the caveat, probably needs tech money flow, right? We need tech money flow to keep cybersecurity in focus. Same issue with Palo Alto. Rejected the prices just above the 100-day moving average, upside maybe to 205. Post earnings, it popped all the way to 208. So it's got 10% upside. Similar upside to Fortinet. I like the way that the chart looks in Fortinet better than in Palo Alto Networks, but they're more likely to trade a little bit together here. Support 180-ish in Palo Alto. The 180, 177.5 book credit spread's about same on capital, but that's one way to potentially look at PANW to me. Fortinet, by the way, on the put credit spread, I'd be looking at like 95, 96, and right now a 96, 95 put credit spread's about 30 cents. So that is an alternative there that looks decently attractive on the return on capital. 25 to 30 cents for a 96, 95 put credit spread. 96 is not the low, but it's close to it other than the dip in March 13th, 14th. When the market made its low. The ultimate low is closer to 93. There's not a good enough return on capital to sell a 93, 92 put credit spread. But if I pull out just those 2 days, the 13th and 14th, then I start looking at 95, 96 to be that support level. And those are tradable levels. Not the strongest support, but decent support. Okay. CRWD gave it all up today. So 2-day move, you go to Monday's close till Wednesday's close is effectively zero. Again, rejecting the 50-day moving average. Upside might be into the 440 range. So it's got some good upside, but I'm more inclined to look at like Fortinet. And then Zscaler is the winner for now. Near the highs, breakout potential here. So looking for that initial pop. If we see an initial pop in bug, Zscaler back at yesterday's levels, pushing through the previous highs. Previous highs were this one on February 18th of 217.10. That's the closest striking distance that I see for the guy that prefers the breakout type trade. And with implied vol at 6-month lows, there's a leverage component there for just an outright long call. So Zscaler, we don't know the resistance point above. Fortinet, Palo Alto, CRWD, we know where resistance is, even if it's far away. Zscaler's got that kind of what we call like that blue sky breakout where there's nothing above it to really create a obvious sell point until you get towards like 260. All right. that's going out to February highs. They're all-time highs, I believe. I don't think it ever. Oh no, it did have a 380 high back here in 2021. So there should be some resistance at 260, but if I'm trading above 220 or above 217 and a half, I'm not looking for targeting to 260 if these prices ever load. Come on, there we go. You can see that these are all kind of worthless options. If I wanted to play out for a move to 260, I'd have to go to like June options and start playing around for a long-term bull trade, a little bit of move before it starts to really kick in. And we got to get through some decent open interest building in Zscaler. So that's the longer-term bull. Concern might be a stall at 250, but that's still 20%. So I don't think anybody would be too ticked off if we got 20% and then stalled. Unless you're trying to play for a 300 immediately. All right. Let me go back to some sector movers here. So XLP, consumer staples, bullish today. That's actually our biggest standard deviation move of the day. Right there with XBI on the downside. So people are selling biotech and buying consumer staples. All right. I mean, it's Kroger. Yeah, I guess Kroger is up 3% today. The Home Depot, 0.25%. Meh. Thinking through some of these other names, it might be. We know Caterpillar was a little weak. Blah. Raytheon actually is testing a breakout right now. That could be interesting tomorrow if it runs. Altria back up, unwinding the dividend move. PM, come on, there we go, 1.5%. ETS. So these tobacco names are getting their money back in. The flight to the safety. So we're investing in the safe havens again, at least for today. After looking like the safe haven trade was starting to unwind, safe havens coming back in to be in focus. Like insurance names up today, So we're going for safety for now. I mean, T-Mobile. There we go. You can see these names for the safe haven type trade. If you're looking for the safe haven type trade, this is kind of where to go. It looks like Altria or T-Mobile. A little riskier would be VZ. They had to play a little bit of catch up, but above the March 18th high, start looking at 46.5. It doesn't sound like a lot, but it's a lower volatility stock, and so it can be leveraged for a good return. 5% is still a way to make good money as long as the trade is right. I just noticed India is taking a little bit of a pause for the cause, rejecting the 100-day moving average. But I mentioned this is kind of driven by HDB, which got very overbought up to 70 IBN. Got very overbought up to 76 RSI, now 73 in my NDA. They're hard to trade because of the gaps again, but they've made some nice moves. I would think of them as better stock trades and options because when you look at like HDB option liquidity, it's monthly, it's wide, 65 cents wide on a 90-cent option based on the 80-cent option, I guess, 75-cent option, whatever. Midpoint is around 72.5. I don't want to pay that kind of premium to buy a 75-cent option. And then I'm going to struggle with liquidity both in and out. The in the money 65 calls are $3 wide. Just no liquidity in these things. So they're better for stock traders. Speaking of stock traders, I'm looking back at Rigetti. Not executing yet. So when I see tech start to be okay again, I'd rather then look at the Rigetti trade. So I'm holding off for now. I may regret it. Yeah, there's some serious upside here with these $12 calls. Now that they're only a quarter, it's very, very tempting. I think if they get down under 20 cents, they become worth the lottery ticket. But at 25 cents, it's still 2.5. It's still 20% too expensive. So it doesn't sound like a lot being 25 versus 20, but a nickel on a is 25%, right? So I don't want to get overly ambitious with the into lottery ticket type trades, because if you buy everything in lottery tickets, even if they're a 10% chance of success, it's very easy to lose on all of them. You need very specific setup and a lot of luck to hit big on a lottery ticket. App Lovin', our calls had gotten up to $7 yesterday. They're back to 3.5 today. So you can see how quickly those lottery tickets can shift. They were 2.5, then they got up to 7.5, now back down to 3.5. So these lottery tickets move aggressively when the stock doesn't get that continuation for that real big move. So I don't want to be aggressive with a lot of them. It's a couple type of lottery ticket type trades, a couple of anti-bearish type trades, a couple of bullish type trades. And if I'm getting too much on the long side, then a couple of hedge type trades. That would be semiconductor downside. Could be, AI downside. It could be NVIDIA downside, although I hate trading NVIDIA to the downside. It still could be the trade. It could be Intel to the downside, saying that the new CEO is no longer a rationale anymore now that we've had 2 weeks of digestion of that news. So can it get back down to 20 now that we've digested it and it just goes back to market beta? Perhaps. A couple of other ones I think are worth looking at for people that are looking for some ETFs that just give some indication of the market. When momentum stocks are working, this is telling me more of a bull market story. Momentum stocks started looking like they were working, but today, offsetting that, our ETF, the innovation ETF, is very similar in terms of performance. So watching some of those sort of names can give us a really good indication of what's going on. And if you like ARK, and Roku yesterday was looking like it was ready to go, pushing above the 50-day moving average. I still don't know why Roku would be so particularly innovative, but at the end of the day, it's a part of ARK, and it should be used potentially as a proxy for the ARK trade if you're looking for an individual name. Much like I look at NVIDIA for semiconductors, or Apple and 7. Going into those names are going to give you a lot of the QQQ basket performance on their own, when I don't want to get down into the nitty gritty of smaller tech companies or smaller financials or something like that. Speaking of smaller financials, I should look at KRE. I haven't looked at this in long enough. If XLF continues higher, I think looking back into KRE is going to be a good one here. We're starting to get some excitement. Big volume in Regions Financial on expiration Friday. How about Zion? Big volume on expiration Friday. These are getting towards that inflection point where 10% upside seems like the next likely resistance, right? If we start to feel like we miss out on some of the financial run, if we start pushing 78 in Citigroup and regional stay as laggards, 260, it's not far from that level. And then the regionals may have to start becoming the value play for those looking for financials. So something to watch here going forward. Regional banks might be back in focus. Okay. In the near future. Not yet. I mentioned MELI. I just want to show you guys down 5.5%. It's basically untradeable in my opinion. I mean, people that if you're looking for a large capital allocation, even if you're using options, the April calls are $80 a piece, $75 a piece. So 7,500 to $8,000. Get into Mercado Libre, one share, $2,000, one option, $8,000. Of 2,000 could be a rational one, but it's going to use up a bunch of margin. I guess we got tight enough spreads that it could be achievable, but the liquidity is kind of limited here. I mean, $6 wide markets, $7 wide markets can be tough to trade. So it's hard to justify much of a trade in Mercado Libre, but I think that's how I would look at Mercado Libre. If you're bullish and you think that this 5.5% drop is too much, and I tend to think it's too much, but it may be wrong. Maybe we get down to 1900 and then I'm regretting it, right? But it's a spread-based trade for sure for most people here. Outright options aren't going to get you, are just so expensive that it becomes a spread type trade in order to keep the premium lower and the risk manageable. Okay. ETN I mentioned was breaking. I tend to like ETN. I mentioned it, I think, yesterday. I think it was yesterday I was talking that I like ETN. I don't agree with the market's reaction to ETN in general, but the market is always correct. It's just a matter of today, at least it's correct. It's correct right now. And then I'm trying to predict what the market's reaction will be to it in the future. So a month from now, the market will tell me whether or not they agree that this stock should be trading higher. But today it is where it is. WNB did test that high level of 61. That might be a little bit easier to buy into if it bounces back. But I think wait for a break up there. AMI, above 29 looks attractive. So again, we've got a lot of stuff sort of setting up for tomorrow, depending upon how this news conference comes out in the next couple minutes. So I think watch the news, see how the market reacts, and then trade the reaction. And again, I'm looking for more of the bullish side, but I'm not going to position on it today. I will, if we get a small dip or a recovery tomorrow, I think that's where it gets more interesting. If we get a big break, then got to start looking for some hedge type positions and or bearish positioning, and we'll see how the market can handle it. All right. All right, that's what we got for today. Let's keep an eye out for it. Like I said, my favorite trade yesterday is still my favorite trade today, I guess. JD, put credit spreads, and GME targeting 30, even though earnings is already out. It looks like it's on its way. So the GME call fly for 30 makes a lot of sense to me still. All right. So for IBIT, I'll touch on it real quick. We're staying above the 10 and 20-day moving average in Bitcoin. It is a bit of a pullback. I think tomorrow will be meaningful. If we bounce off of it, it sets back up, all the Bitcoin-related stocks, MSTR, Mara that I'm in, could be back into Hood or Coinbase if you're looking for the trading of cryptocurrency. It was a dip, but not a destruction of the upward trend here. It's just testing the low end of the trend that we've been seeing over the last couple of weeks. So tomorrow could be meaningful because if we break down below those 10 and 20-day moving averages, it starts to shift back into chopping market. And if it bounces off of it relatively well, then I'm comfortable with Bitcoin upside if the tariff news is light enough. So yeah, kind of a nothing for it today, other than knowing that it may be at risk here getting down if we get down just a little bit more. All right. All right, folks. I will be back on for the close tomorrow. We'll see what this afternoon's news conference and tomorrow's trading response brings. Thanks again. Have a good evening.